welcome back to my channel. This is Rachel over here, and I am a real estate agent in Cincinnati, Ohio. And today we have Tony Chappelle. And yeah, Tony, please tell us more about you.
Well, hello, Rachel. Thanks for having me. I am a loan originator here in the Cincinnati, Ohio area. I am licensed in Ohio, Tennessee, and Florida. I'm just here to just shed some light on the market right now and the mortgage market right now, and to have a discussion with my friend and neighbor Rachel.
Thank you. Yeah, nice having you. So I, since I'm doing real estate, I have come through a lot of first home buyer, and this is the more question that they come ask me. So usually if they come to me and they don't have the mortgage, lender that we work with, and we trying to introduce them to, our favorite mortgage lender.
Mhm.
And so this is common question that they usually ask us. And yeah, so the first question is, what is one thing the buyer should absolutely know before they start looking at homes and before they meet with you? And
Okay.
one thing that they should be working on?
So I believe the first thing every home buyer should know is where they're at financially. Is it a good time in their finances? Is it good for them with the mortgage budget for them? Is it a good time to purchase? I always tell myself and others that you have to have, a few things to purchase a home. Unfortunately, you have to have credit. Fortunate or unfortunately, you have to have credit. You have to have assets, and you have to have liquid cash or an ability to get cash between, your savings, checkings, retirement, things of that nature. And sometimes in some programs, you can actually get a gift as well. So I would always say the very first thing would be to know your personal finances before you speak with a lender or even a real estate agent, just to make sure that you're able to afford what you're looking for.
Yeah, no, exactly. And that's kind of hard because, for the first time that people looking by the house, they just already know that how much they earn, right? And how much
Hmm.
the paycheck is. And how's that to make understand, okay, if I make this much, how can I afford, like $200,000 house or $300,000 house? So the best way is, always, understand the income, but bring that to you and kind of, asking, okay, well, how much can I afford the house?
Absolutely.
And that's where is the next question is, what the difference of being pre-qualified and pre-approved?
Okay, so it's two different things. So a pre a pre-qualified is basically you send me, you fill out an application. I send you a link after I have a conversation. Here's my process. I'll speak with you. We'll have a conversation. I'll shoot you an application or a link to my website. You'll fill the application out. Um, you'll have the information there. And then based off the information that you put on your application, some loan officers will ask you, myself, before I give you a pre-approval or pre-qualification, I'm going to ask for some personal income and some assets just to see if you're there. Because as you're aware, Rachel, this market is very demanding. So if we can cut out processes in the process, it will kind of streamline the process. So the difference sometimes is that some people qualify you based off what you say on the application before they verify it. Maybe verifying being getting your paycheck stub, getting your bank statements, uh, seeing how much money you have, if you have that down payment that you said on the application. Basically verifying what you put on the application, which is what you'll get from myself and my brokerage is that um, you're not going to get a pre-qualification or pre-approval in this market until we review your documentation.
I see. No, that's really good. And usually, how long would that take?
Usually in this market, we try to get pre-approvals out within 24 to 48 hours. If you get us all the information, there's things where when you fill out the application, you can upload your documents right to the portal. So if you do that, it should be 24 to 48 hours before we have say, hey, yes, based on the information you provided, we can approve you for this amount based on, or we can, have that conversation like, hey, we need a little bit more documentation to document your assets.
Yeah.
So, yeah. So I would say 24 to 48 hours on regular time. Now, disclaimer, lenders, realtors are extremely busy right now. So, we don't want to offend anybody, but I would say 9 times out of 10, you will hear back from myself within 48 hours, 100%.
Yeah, that's what I usually tell, our new client too, that if we can pick up the phone, feel free to text us because, if we see the text, we understand, what we had to deal with right away. And we get back to you as soon as possible instead of call us. And we can't pick up the phone. And if they don't leave us the voicemail, we don't know who called.
Absolutely.
How can we help? If we don't know how important your situation is to able to okay, let me call you back right away, it's about the communication and how can we serve them the best, right?
Absolutely 100%.
Yeah, and since you bring up all about the documents, and that's where the next question I'm going to ask is, what the most common type of loan that people ask for, and in your experience, what's the most difficult loan?
I would say majority of the loans that we do are maybe conventional loans, between conventional FHA, and then I would say a third would be VA.
Okay.
Conventional is the most straightforward. You can put anywhere from 3 to 20% down.
Okay.
Those are, and that's just basically your typical W-2 worker. The most difficult loans right now, I would say, would be a self-employed borrower right now due to the pandemic. Which it's loosening up a little bit. Our small businesses was affected with the COVID, and so lenders are still wanting in the same type of documentation that they wanted pre-pandemic, and sometimes lenders have what they call overlays. So that's basically rules on top of the federal guidelines. So that would just be basically the hardest because you have to show a 2-year history. Lenders don't want to see a significant decrease of revenue out of your company. So basically it's kind of hard right now because most self-employed people, borrowers, haven't filed their taxes yet. So they don't really have that that proof of what they made or what they didn't make due to the pandemic. So it's kind of hard painting the picture to the underwriter.
Yeah.
But is it impossible? Absolutely not. I work on them all the time. I actually have one that's in underwriting currently. So it's just the most. It just takes the most steps to get to the finish line.
Yeah.
It's a little bit of it's a little bit of hurdles, but if you have a good loan professional or a loan officer, they should be able to let you know like what's going to work and what isn't going to work up front. So that's why we go back to that first question or that second question. It's important to get your documentations up front so you won't experience the disappointment when the underwriter comes back and say, hey, I can't qualify you based off the information you gave me. And then that's a tough conversation to have with you, Rachel, when I got to call you and tell you like, hey, your customer is falling apart in underwriting. Then you're mad.
Oh my God, that's
I'm
so.
mad. So,
Especially in this kind of market too, and the seller really aggressive, and
mhm,
just wanna, if people really want to sell, they want to sell right now, and
right
it's
now,
kind of
absolutely.
when it possible. And if you have a trouble with your mortgage or your loan, it's usually spread out. Before, like we can go like closing day to 45 days, right? And
Hmm.
people getting so aggressive that it can be less than 30 days.
30 days,
Yeah.
30 days.
And you have any trouble of, it's usually every single process of ask for the paperwork, everything is like at least 48 hours, and it's gonna
Absolutely.
add up quick to that 30 days, right?
Yep. It's a race to that 30.
Mm-hmm.
Um, I can't, I just can't explain enough as many calls as I get to with these realtors. Even the listing agent will call me and say, hey, or I need this done in 30 days. Is that possible? And it puts a lot of pressure on you. So
Yeah.
you just say, yes, of course, we can get it done. Depending on any snags, if your customer gives me everything that I need,
Mm-hmm.
um, it's my job to get you to that finish line in the allotted time you know, that we already set aside and we have that contract to uphold.
Yeah.
So it's stressful, but we make it.
Yeah, no, definitely. That's hard, especially with the whole quarantine and COVID, and the stop the job, have unstable job. And I have this question, since a lot of people that they kind of like got laid off, but then they got called back to work, or like they hour been produced, or they said the salary had to be produced to certain amount of of hours.
Hmm.
Now the salary cut. There's no guarantee on like when they're gonna come back full time. And how's that affect you with the loan approval process? Was it?
Yeah, it can affect us.
Mhm.
It can affect us. But okay, so here's how it goes. It's different if it's W-2 and self-employed. So if you're self-employed, that's completely different. This is what I'm going to say is just based off the W-2 worker. So
Mhm.
if you're laid off in 2020, correct? You have some layoff in 2020. Then you get back to work in 2021. So you're back to work now.
Mhm.
Every loan we have a verification of employment. We just want to make sure with that verification of employment, what we fill out is basically how many hours are you guaranteed, and then we match that with what you're working now. Um,
Yeah.
so basically, it's our jobs to paint a picture to the underwriter.
Mhm.
I try to tell my clients that we all know that, it's a human being looking, even though we're doing a lot of this digitally. We have the desktop underwriters, we have, that helps us underwrite per the guidelines up front. But it's always a human being who's looking at your file. So you have to, as a loan officer, you have to paint that picture. So
Mhm.
um, they most of the time lenders don't want you to have like what they call variable income. So
Mm.
say for instance, you're a full-time worker, you're guaranteed your verification of employment said he's guaranteed 40 hours, but your check has 32 hours. As long as you can provide a 2-year work history, some underwriters
Before layoff,
will
or
before
employment.
layoff.
Okay.
So before layoff, but
Mhm.
afterwards, it's just a scenario situation. So say for instance, you've been at that job for 10, 2 or 3, 4, or 5 years.
Mhm.
So if you've been at that job for several years, you were laid off, you're back to work, you have a history that you've worked the allotted hours to verify that's on your verification of employment from your employer,
Mhm.
you're good.
Okay.
Now, the places where you're not good, if you come back from work or if you're just laid off and haven't been back to work yet,
Mm.
that's not going to work. Um,
That makes sense.
that's not going to work because it's not a continuance.
Mhm.
So the loan officer wants to see at least 3 years. Like, it's hard to say if they're going to stay for 3 years, but the underwriter wants to see that continuance of income. So if you're not having a continuance of income, that's where you're going to run into problems. And if it's not where you were and your income's on a decline, that's when it's going to cause some problems, and it's going to be, the underwriter is going to ask for additional information.
So for that information, does the employee had to go back to the employer and ask for that, paper that say that, okay, this employee is going to be full-time without that guarantee, keep working full-time for the next,
Sometimes, honestly, Rachel, sometimes it's, hey, I need a 40-hour or 80-hour check before we can proceed. And that slows down to 30 days, like we said, remember?
Yes, yeah.
So they could say, hey, Tony, they want us to provide at least 30 days to 60 months of paycheck stubs. Mm-hmm. So with that average, if some of those checks are, say, for instance, you're guaranteed 40 hours a week, and some of those checks are 30, 32, 33, 34, mm-hmm. and your verification of employment says you're a 40-hour worker, they're going to say, sometimes I've had times where underwriters say, hey, I can't use this check. Give me the next check. And if the next check's 40 hours, we'll proceed. But if it's 32 hours, then we might have to suspend the file because it's variable income.
Yeah.
So it's just good to have all the details up front. Myself, I was previously a mortgage underwriter before I became a loan officer. Mm-hmm. So I kind of see a little bit what they go through. Not everything, because there's some different rules due to the scenarios, the situations we're in. But mm-hmm. other than that, it's hard. It's a case by case. It's just good that you have a professional to hold your hand through it,
Yeah, exactly. And also have us, kind of give them enough information that know that, hey, it's still possible. It's just a longer process.
Right. It just takes a little longer.
Yes.
Yep. You just have to be patient.
Exactly. And, and exactly be patient. And, if something come up, and because right now the market is so competitive, and I know that you want your dream home, that your future home that you can build your family with, and with this kind of market, that's all we ask our client is be patient. It's still possible. When the right house comes and your situation is, perfect, you're good with that house, that it will work out. So
absolutely.
Awesome.
Yes, ma'am.
No, that's really like good information right there, Tony. That's where we can able to help people that, with this kind of market, with the job layoff, cut off hour, that people lose hope of able to buy the house. Mm-hmm. And at least with this one, we give them, some alternative way that, is still possible.
Absolutely.
So, so what is the current interest rate right now as today, March 19, 21?
March 19th, I checked the rates early this morning. So it's some good, it's some bad. We've been in a market now where we've been pampered with these sub 3% interest rates on 30-year mortgages. Yeah. And that was just excellent. Trust me, I'm a loan officer. I know that it's so great to have lock a loan that's 30 years at 2.75. Oh, it's God. Great. Yeah. So currently right now, the rates are a little bit over 3%. Mm-hmm. But it just depends. Can you get an under 2% or under 3% rate right now if you pay some additional points? Of course. Mm-hmm. You can pay it, but it's just a catch-22 if you want to spend extra money to buy that rate when it may not affect your payment as much as you think it is. I would say, if you don't want to pay anything, I would say the par rates right now is anywhere from 3%. I would say 2.99. No, I wouldn't even say 2.99. I would say 3% to maybe 3.25. So somewhere there on a 30-year. Yeah. But there's ways. FHA is a little lower right now than conventional. I would say the bottom rate with FHA probably will be about, 3%, 299, 3% ish.
Okay.
But it's just hard to say exactly what the rates are, but
Yeah, it
depending on there, if you're right there
depends,
between
right?
3% and 3.25.
Yeah. So it depends on their credit score and their history.
Absolutely.
Yeah.
Credit score is a big piece. Um, you know, if a credit score is a little lower, I would say the
What is the
best
score?
pricing,
What
the
is
highest score is
Mhm.
probably, you're going to get the best pricing anywhere from like 720 and up.
Okay.
Anything under 720, you might get like an eighth of a point lower.
Okay.
Um, I recommend, depending on how much money down,
Mhm.
if you're like 640 to 680, I would recommend, what I'm seeing now is FHA rates are a little bit more competitive if you're going to go conventional in that score tier with conventional. If you want to go conventional, probably want to be, to get the best rate, to maximize your rate, you probably want to be at that 720-ish.
Okay.
Yeah.
Okay. No, that's awesome. So since you have so much experience on, lender and mortgage, so what do you think about the interest rate this year?
I don't have a crystal ball. I'm not a psychic. I wish I was. I would be rich.
Oh, yeah.
I would be rich if I could just guarantee.
Well, based on your experience,
My experience is,
what do
I
you
feel
say?
like a lot of people say the rates are going to, keep going up and keep going up. I don't know. The Feds came out and said they're going to keep the rates low for several years. So that's a good space. Do I think we're past the twos? Possibly.
Mm-hmm.
But I just want to let you guys know, like, 3% is a great rate.
Yes.
Like, I don't know, like, why are we just like hating on the 3% now? I don't understand. Like, I know people who have a 5% mortgage right now.
Oh
You
my God.
know, I'm
Yeah.
reaching out to people I'm reaching out for people who to
I think
refinance.
we're
They're in their
just
fours.
spoiled with that number, like
Absolutely.
2.5%. We're just so spoiled for the last year, like, oh, it's 2.25, 2.5,
Yeah.
the best thing ever. And now it's like about to say, like, oh my God, it's like,
3%. I don't see why
yeah.
people there, but I mean, if I was, I don't have a crystal ball, but
Mm-hmm.
long as the rates are in that 3 to 3.5, maybe even 3.675, maybe,
Yeah.
you know,
It's like go back to 2019.
yeah. And I think it's just going to go back. I mean, as long as it goes back to the first question,
Mm-hmm.
as long as you have your finances in order, know what you can afford, would we love to get you locked in under 3%? 100%. But if you are a firm buyer, you have your ducks in a row, you're not going to really feel the difference between 2.75 and 3.25. You're not going to really feel it.
Mm-hmm.
You would like to see it on paper. Absolutely. You want to maximize the rates for sure. But would I say freak out because if the rates go to, 3.25, 3.5? No, that are still excellent rates. I can't stress it enough.
Mm-hmm. I think that's why people scare, like to see the number keep going up, but because they don't understand how the loan work. And that's what lucky that you and I've been in the business. We understand if you want a lower rate and you can get it now, if you have some cash saved on the future, you can have that cash put down for your mortgage payment. It will drop down
And it
your
will drop the rate. Absolutely. If you prepare yourself and say, hey, I was only going to put 5% down when I was getting a 2.275. Now I'm at a 3%. Hey, how about I got the money laying around? Let's put 10% down if I just want my payment to, reflect that. So it's ways, and it's great to have a professional in your corner who
Mm-hmm.
can guide you. You could be excellent at budgeting. You can be excellent at making money,
Mm-hmm.
but it's just good to have a professional like yourself, myself, just to guide you in the right way to, keep a lot of that money, honestly.
Exactly. No, that's really great, Tony. No, thank you so much for really good information that you're providing us.
Mhm.
Do you have any special programs you have at the moment?
Um, well, the best program I have recently, of course, we got all our rates right now are very low, are very, very competitive on the government side, VA and FHA.
Mm-hmm.
Um, I pride myself on being effective, right, and efficient. My average closing time is probably around on a purchase, 26 to 31 days. So I'm right there. Um, so far as program wise, I think the best program we have that's very exciting for me now is the more of the jumbo market is opening back up after COVID. Jumbo was probably the market that just killed, like went away because they're bigger loans, right?
Mm-hmm.
More risk. But I have under like a 90% jumbo loan program right now, which is very unheard of, up to $2 million. Um, that program is, I mean, one of the best right now because usually you only see the big banks that's going to take you 60, maybe 90 days to close on those jumbo loans. We're closing those in maybe 35 days. Those are, you know, small. I think it's a 45% debt to income. But if you got somebody buying that particular size house, they're high wage earners. So
Okay.
um, that program, of course, I have a 5% down, uh, no escrow program where you don't have to provide all the escrow. It's just easier to get in. You're at 95% LTV. You put less money down, and you don't have to escrow. So with that, the good thing about that is that you don't have to pad your escrow account. So you don't have to pay that year up on taxes. You don't have to pay that year up or 15 months up, and insurance up front. You can just take care of that yourself, and it just gets you to pay less money down. I have that. Um, and I just got everything else. I can literally do everything. We have some investor friendly programs that me and you talked about offline. So
Yes. Yes.
those are some programs that we really got going on right now. So,
Mm-hmm.
you know, we're back. COVID slowed us down for a minute, but now we're back. We're
Yep.
rolling. Uh,
Oh,
Everything is coming available for us. So we're going to get busy. Rachel, I hope you're ready.
oh my gosh, I'm ready. Like that's why, to have a good lender on my side is always the best benefit for our clients because, one person can only work so much many hours,
Absolutely.
you always have needs of extra people. And then, as a realtor too, like we try to match, our client to our lender so they can work well together. And
For
so
sure.
that's important for, at the closing table, if you don't able to go through all this process together as working communicate well and understand each other, then when get to the closing table it can be really difficult.
Absolutely.
So
For
yeah,
sure.
so as you mentioned for the new investor program, so that's something that hopefully we can follow back with you on that for
Absolutely.
next show. So that's going to be amazing information for new investor. As probably a lot of people around my age that would love to start investing in real estate. So
Absolutely.
yeah, no,
Absolutely. I look forward to it. I appreciate you having me.
yeah, no, thank you. This really fun, and I enjoyed this a lot. And yeah, no, thank you so much for having me as well. And okay, and so for everybody watching, if you want Tony information, I will have all it down here. And if you have any question, send me a text or email. Also, feel free to email Tony as well too. If you have any question, and yeah, have a good day.
Thank y'all. Thanks
Yep.
for having me, Rachel.
Thank
Appreciate
you.
you.